will stay away from new developments. One of the biggest mistakes that people do is buy brand new with a promise from the developer that the rent is going to be XYZ, or they offer you a rental guarantee or a lease back from them, and people jump on these things. They think they're buying a 5.75% or 6% net yielding property. Oh my God, I found gold mine. Yeah, but in 2 years' time, that rent is not sustainable at all.
Where do people, you think, go wrong now in terms of they buying in their name? Do I buy in the business? What mistakes have you seen in the past?
I think the biggest mistake is that impulse buy. They just see cash in their business. They see that maybe they have enough of a deposit. I always tell my clients now when I'm thinking about commercial property is that you need to plan much further out than you do with residential. What
are the key differences or roadblocks people face when jumping to commercial?
I'd say the main one is commercial, you can't find things online. Whereas I find like, at least in the resi space now, with all the content coming out, you can find a lot of things online. Even if you pop into the branch, at least the banker there will be able to give you a good guidance. Commercial, it's like a whole different world.
You can do everything that you do in residential and commercial as well. But there's a few CapEx expenditure ways to do it. But then there is one way which new commercial investors don't know, which is
all right, buying Gold Coast guest episode or guests episode today. I got the roundtable out, which I'm really excited for. But firstly, before we jump into it, I just want to give the listener, whether you're listening to this, walking the dog out on the beach, going for a run, playing whatever it is, this is all things commercial property. It's one of the hot topics right now, not only on a global standpoint, but I think on the Gold Coast too. I don't think we've even scratched the surface on what the whole commercial property industry is about here on the Gold Coast. So everything commercial, the next 40 minutes is going to add so much value to you. And I've got 3 experts on the table. So I love a round table. I've been getting amongst it as of late. So we've got Ian Barr from Campbell Barr Financial.
That's right.
And he's one of the top brokers nationwide and does specialize a little bit in the commercial too, which I'm excited to chat to Ian around. We've got Alberto Di Gravio, the Italian stallion from Bespoke Commercial, who's actually a buyer's agent, but specifically for commercial, which is awesome. And we've also got Reuben Beigel, director at New Wave Group here on the Gold Coast, not only a resident, we've had him on the show before, but also an accountant background, has dealt with a lot of business owners, commercial assets, and is also a commercial owner himself. And we're going to dive into different things there. So yeah, thanks for jumping on.
Thanks for having me.
Thank you.
Bit of a round table, having a bit of a chew the fat. I think number one, maybe just quickly around the table, maybe just a quick sprinkle on where does commercial fit in your professional lives at the moment? How did it come to be? I still find it's quite niche, to be honest, commercial, especially on the Gold Coast. Even for myself, I can start for me, obviously running a business. I've always been big on property outside of the business and doing my thing there, but commercial has just been an asset class that I'm only just starting to really find the nuts and bolts about. I seem to know a lot in resi, but commercial is a whole different game. So for me, commercial has just popped into my world as of late, not only from a business perspective, but personal perspective too. I'll touch on a recent commercial acquisition too, and I'd love to hear your guys' thoughts and the DD process I went through that, which was a lot different. Yeah. So that was where I'm coming from. For the listener, I'm not saying I'm an expert. I'm actually trying to learn off these guys too in terms of commercial. But what about yourself, Ian? You've obviously been a finance broker for a while now, but when we'll chew on the fat, you've seen some of the complexities you've done in commercial. It would be great to get you on.
So I basically worked in commercial banking for about 14 years. So it's basically looking after commercial clients, whether they're buying commercial property, business, or if the directors are buying residential property, you basically look after that whole transaction. So I was doing that for a long time, and then me and my business partner Matt, we used to work together at ANZ Commercial. And we basically decided to go out on our own, and from there, some of those clients have followed us throughout the whole journey. But I just find that with brokers, lots of them know residential because they've bought residential themselves. If you've got that background of dealing with commercial clients for a long time, there's so much to commercial, whereas resi, there's still a lot to it, but not as much as commercial. Commercial is a whole nother beast, and you really have to be across it to be giving good advice to your clients.
And we'll unpack in a second, Ian, some of the key differences when it comes from a lending finance, because there's a lot, so stay tuned for that. And what about you, Alberto? A buyer's agent. So you practically represent people specifically wanting to buy commercial property.
Specifically commercial, whether they're owner occupiers or investors. Commercial property, it's all I've been doing for the last 11 years. I got into real estate in 2015 back in Sydney, initially for a very brief period of time doing resi sales, but I didn't like it because it was too emotional. And I guess my background and also my studies with master in business administration, I've always been more about the business aspect of things and the numbers. So I started working for a commercial agency in Surrey Hills in Sydney. And basically I was leasing and selling offices, retail shops, mixed use properties, and a little bit of industrial as well towards the end of my experience. And I have to say I learned all the aspects, the dynamics and the point of view of tenants and owners and landlords, and what happens also behind the scenes and the dialogues with the agents between us and between the vendors. So I've done that until 2021. Then in 2021, I left the agency because it was too transactional, too much about the commission. And funny enough, I was renovating my place and some of my old clients called me up saying, I love how you operate. Can you help me find a commercial building for me? I'll pay you a finder's fee or a buyer's agent fee. And back then, I had no idea about commercial buyer's agents.
Yeah.
There were not many. And at that point, I joined an agency back in Sydney. And I headed all the commercial acquisitions on their behalf, starting from local business owners in Sydney and then expanded to investors that wanted to look elsewhere. We started looking in Newcastle and then Gold Coast, and Brisbane came straight after in 2022.
Interesting. So there's a fair bit of not only experience there, but knowledge, which I'm pumped to talk around some of those asset classes. I think that's been the big difference I found from resi into commercial is all the different classes of assets for sure. And Rubes, obviously, New Wave Group, you guys have expanded, all doing so well on the Gold Coast nationwide. You've got clients from all backgrounds, but I really wanted you on because the perspective from, I guess, an accountant, there's a whole nother podcast in itself there. But also you're a commercial owner as well as a business. Obviously, that whole relationship between securing commercial, but also for your owner-occupier, but seeing as an investment tool. So where did commercial come into your world?
In terms of myself investing in commercial, that's probably similar to you, very recent in times. And I run multiple businesses and now I'm trying to secure premises for each of those businesses, not so much for outside building wealth. It will be part of it, but first and foremost, it's for my business. In terms of the accounting side, we predominantly work with just business owners. And what we're seeing and have seen is that they also want to diversify away from just growing wealth within their business and start looking at how they can solidify, but at the same time complement what they're doing at the business at the same time. So looking at how they can structure it so they can minimize tax as well as improve future investment, as well as have somewhere for their business to live down the track. So whether that's SMSF or whether they're purchasing it with business partners through trusts or whatever it may be, we're finding that specifically on the Gold Coast, there is a lot of time and attention now for these newer businesses, especially e-commerce businesses, to start finding these warehouses where they can house their cool photo shoots and have their warehouse there and their team there. And I think it's just going to get stronger and stronger on the coast.
That's what I'm seeing with the Gold Coast too. We'll actually unpack and uncover some locations and pockets too, because there's little commercial hubs in all sections of the Gold Coast that listeners right now might not even be aware. And then it's one of those things you'll just see it everywhere. And I'm noticing that in commercial with business owners, especially the ones we talk to as well. It's not just your premises, it's also your factory for stock. It's also the content studio. So there's a lot of ways people are manufacturing different variables within the premises. And I'll also chat on how you can actually, everyone knows about renovating a house, but how do you do it in commercial? Here, adding mezzanines. And so we'll talk on that too. But I think number one, I've always believed any real estate game is a game of finance. So Ian, we might start with you. So what is the key difference, or where do people come in so blinded from, they might have purchased owner-occ, maybe one investor, and they're like, all right, I want commercial. What are the key differences or roadblocks people face when jumping to commercial?
I'd say the main one is just education. It's so hard. Like commercial, you can't find things online.
True.
Even if you pop into, let's say you popped into the local branch of whatever bank you're with, those people that you go speak to, they're not in commercial bank. So then they have to refer to someone else. So even those people that you go speak to initially, they're referring you to someone else. People just don't know what they don't know. Whereas I find, at least in the resi space now, with all this content coming out, you can find a lot of things online. Whereas even if you pop into the branch, at least the banker there will be able to give you good guidance. Commercial, it's like a whole different world, like you say. Just finding who to speak to and then them having you basically hold your hand the whole way. That's an accountant is massive. A good broker is massive because even within the same bank, you could speak to two bankers at the same bank, same team, and you could get completely different answers, to be honest. Because one of them might have written a particular deal for X client and one of them might not have. So one of them might say, yeah, we can do that. And then the other might say, oh, nah, we can't do that. Because they haven't had that experience yet. So you've really got to have a good broker and a good accountant is key.
So you'd say probably first and foremost is find out education. And if it's not readily available, I definitely agree with that actually. If it's not readily available, lean on someone to guide you in there. Now that you've found the person, for example, just say what do you think the biggest unlock is from a borrowing capacity? Because I heard deposits, obviously you got to have a lot more deposit.
Well, it's changed. So when I worked at the bank, traditionally you would need, they would basically lend either 65% or even 60%. This is when I first started. So you need 35 or 40%.
And to give the listener a quick, that's basically the bank will lend you say 67. You need to come up with 30%.
Yeah, if not more.
Yeah. So on $1 million, what's that? That's
350.
Yeah, 350,000 to start.
Yeah. So traditionally, I would always notice buyers were a lot older, a lot wealthier because they've built up, cash
They've got
over
a bit
time.
of cash or equity.
Whereas now, lenders are actually getting more and more aggressive. So I'll give you an example. Recently, I had a client buy in Tweed, an industrial unit, owner occ. We got 90% lending and not at a high rate, like still at a very good rate through a bank. Whereas previously, if someone said to me, we're going to get 90%, no chance. It just wasn't available. So now banks are being more aggressive. And again, that's where a good broker, a good accountant, good buyer's agent comes into play, because if you're not speaking to the right bank or you go to the wrong bank, they might still say, you need 35%.
Yes. And then you're potentially out on the asset. Yeah. Or through the education, through finding the right person, there's broker A, broker B. One could potentially get you to the start line and someone might say, no, you're not ready to the start line. Just a quick one. I'm just curious, why has that changed? Why have banks gone more aggressive to like, hey, we used to only, we'd need 30%. Now it's, just 10%.
I would imagine, I don't know the exact reason, but I'd imagine they always look at default rates. So who are these business owners actually defaulting with these properties? And obviously, if the bank's comfortable, obviously the default rates are minor. It's the same with they've got, in the residential space, they have low doc loans. Right? They've got the same thing for commercial, where you could basically provide 4 most recent BAS. So if your business is growing, you're not reliant on financials that may be a year and a half, 2 years old. You can use those 4 BASs to prove servicing. And there's majors that will lend 80% of a purchase price. Where again, previously, it would be 2 years financials, 2 years tax returns, 2 years notice of assessment. This is what we're basing it off, where they're becoming more and more open to writing business, which is cool. It's an awesome space to be in because it is opening up.
Yeah. But that would be different for PAYG investors though, right? Because there are some special products for business owners.
Yeah, that's correct.
That they're not available to anyone.
Yeah, if you were, those are for, that is an owner property. Yeah. But if you were buying a commercial investment property, there's a product called a lease stock. So it's basically where, let's say for instance, a loan's $1 million. Let's make it easy and say interest rate's 10%. You're paying $100,000 a year in interest. As long as that lease that you're getting is covering that interest, 0.25 times or 1.5 times, they'll lend.
Yes.
Obviously, the margins are getting tight at that point, so it's harder to get that product across the line with a lower deposit. But if the numbers stack up, doesn't matter if you're PAYG, you're good to go. So there's so many opportunities now, which is awesome.
And the key takeaway there, I guess, for the listeners, whether you are a business owner, because that's a good point, Alberta, business owner, PAYG, I guess banks are, from my learning too, like they're looking at the holistic now, like who is Ian Barr, who is Reuben Beigel? Oh yeah, track record, few businesses, all the P&Ls looking juicy. Is that what you're basically trying to say? So people are starting to look at holistically the person, the business owner.
They always take into account the person's character. That's probably the main thing. You don't want to lend to someone who's not going to make the repayment. Yeah, exactly. And that's the last thing they want to be seen doing as well. It's always going to come into play, but there's definitely plenty of opportunity in terms of commercial lending, and I just feel like it's really opened up. Yeah, it's exciting. Yeah, it's like a cool space to be in.
Yeah, 100%, and it's definitely growing. I guess from finance, then structure's a big one in terms of. I'd love to chat to you, Rubes, around. This is one just a whole nother kettle of fish, right? And obviously. Like any account, everything we speak on here is obviously of opinion and not financial or solicited advice, just more of a chewing the fat around the table and learnings. But one thing I've learned is accountants and structure are like A players in your team. You need a good accountant because as a business owner, if you're listening, the wrong or right move can dramatically change the outcome. What do you reckon, Rubes, all right, now that we've got maybe finance secured to a degree, or it sounded sounding like my P&L's done pretty well. I've gone to the bank holistically. They looked at me. I'm doing well on the Gold Coast. Where do people you think go wrong now in terms of are they buying in their name entity? Do I buy in the business? What do you think people need to look out for, and what mistakes have you seen in the past?
I think the biggest mistake is that impulse buy. They just see cash in their business. They see that maybe they have enough of a deposit. They've maybe spoken to their finance broker once or twice, and then they'll do an impulse buy, and it's too late to really structure it in the right way. I always tell my clients now when I'm thinking about commercial property is that you need to plan much further out than you do with residential. Much further. So for example, with the building that we bought that actually Alberto found for us, we've been planning for this for the last 3 years. Finding the right property at the right commercials. We already knew the structure that we're going in. We've talked to our brokers about what we can achieve, how we're going to achieve it, and considerations like GST and all those sort of aspects need to be put in place. And it's so much more complex than just going, I'm going to go to an auction, put my hand up, got a 30% deposit, and then this is going to be a lifetime investment. And you need to understand the implications of whether it's better in an SMSF or how much of a deposit you do put in and how you structure it. So I think planning well in advance is where most business owners get it wrong. They try and shoot from the hip and go, I need a commercial property now because old mates put up my rent 15%. It's probably not the right way to do it because commercial property is all about yield and growth and making sure that you have control and structure, and you can't do that just shooting at the hip very quickly. And so for business owners in particular, you need to plan this out. And so the biggest mistake is don't do it yesterday, do it years
in advance.
In advance. And then that puts you in a better position anyway. So if you're going to an auction or you're going somewhere, you know what you can achieve. You can be aggressive if you need to be. And that's where I find the best businesses that buy commercial ongoing, they have a plan, a strategy that's already been built a couple of years in advance. And so, it's an interesting one. It's definitely a different beast to residential.
And I just wanted to highlight one detail that Reuben mentioned, which is GST.
Yes.
Because that greatly changes an acquisition. So if you are an investor and you buy, or an owner-occupier, and you buy a property that is tenanted by a business, that's deemed to be a sale of going concern. Therefore, you don't pay GST on the purchase. But if the property is vacant, you have to pay GST.
Yep.
So if you pay $2 million, you have to come up with $200K
extra.
Exactly right. Same scenario, the property that Alberto found us, we had already planned that we were going to take over that premise. And there was no one in there, so I think the uneducated investor or buyer in like, okay, all I need is this much.
And not buffering the GST component.
We need an extra $500,000 just to cover GST. And as a chunk, then it's hard to just get $500,000 out of nowhere. So it needs to be planned in. Meanwhile, making sure that how you get that money out of your business is at the lowest taxing point as much as possible. So there's all these different pieces of the puzzle that you have to put together. That's why having an agent that knows the due diligence of that property, as well as a broker that understands how it's going to flow from a lending perspective, then structure, all those need to happen at the same time. Yeah.
Just on that too, Rubes, just from self-opinion and all the people we get to chat to day in, day out, what's the biggest structure mistake people make with money flowing from, say, business to personal name? And then that obviously causes a bit of a tax. Because, again, us here talking, we're getting the gist of it now. Like most of society don't understand, like the money in your business is not like your personal bank account that you can just kind of...
so frustrating.
The tax man is always watching and listening. So
that's exactly right.
I see so many business owners make this mistake. So what would you say, not like advice, but just the best ways you've found for your personal circumstances, being able to transition profits into a commercial asset, but still not paying everything to tax?
For me, it's understanding what you need personally first and having discipline, not having to dig into your business assets or cash flow, right? And so a lot of business owners will see the company's funds and go, that's all mine. We do it differently. I do it differently. And the way I teach my clients is understand how much do you need personally, and then we will work out how to take out that money for investments after. And then that way, for example, we have a client that's doing a significant amount of profit. We can restructure them. Instead of having a trust as their shareholder, we actually have a company direct. And rather than doing it and flowing the money to a trust and then going to a bucket company, we actually save them 5% in tax by just doing it that way, then invest the commercial property in that asset. And so there's all different ways, but it's dependent on your situation and where your business is at the moment. The worst thing you can do is just pull out all of the money and then try and fix it after. And that's what I would say 80% of business owners do, because they're not educated. As you said, they don't understand. And if you see money in your bank account, which is all connected usually in one login, it's all yours, right? But it's just a mindset shift of improving that budgeting at the start personally to then unlock the benefits of tax and investment and wealth after that. Yeah, you got a plan. So I do recommend that anyone out there that is going to buy commercial property, before you pull out money from your business, just sit down with your accountant and your broker and ask them the questions before starting to buy boats and Lamborghinis and all those sort of things.
Even like I've always found like a huge benefit is, like you say, sit down with your accountant and broker, because even I've had times where you get financials, it might be not from an existing client, but from a new client, and it's broken into so many different trusts, unit trust after unit trust. And then you're speaking to the lender and they're like, actually, we're not comfortable with the structure. And you're like, oh, well, he's got it all set up. Now we can't get the borrowing because they're not happy with it. So it's like sit down and then work out exactly how we're going to do this before, like you say, in advance.
Yeah.
Because by the time we often get it, it's too late because the structure's all set up. They spent thousands of dollars setting it up. Then we can't go and get the money.
Yeah.
There isn't a perfect way. There's a better way. And that's what I always tell clients. Nothing is perfect. If Alberto's done his structure in a certain way, yours might be different.
Yeah, exactly.
Mine might be different. So it's very unique to each person.
So from the get-go, if commercial, obviously we understand the finance component, but in correlation, the accountant and broker in advance, you should be having these conversations
definitely
way before the start line.
100%.
Yeah. What would you say?
Whenever I qualify a person that wants to buy a commercial, in that initial call, we always talk about structure and lending.
Yeah.
Before they're ready, for me, a person that is ready is someone that has already done step 1 and 2.
Yeah.
Because without that, there is no point to start the search.
Yeah. And that, again, that's a really good one for any listeners with getting to the start line, is you're hearing it from 3 professionals there. Have all of those things done. I agree, Rubes. Like in property, resi, our business sees it a lot. Like some people are coming to the start line and they've got nothing set up, and unfortunately the team can't help them. They might come in 30 days, but it sounds like commercial, because of the again, intricacies. We're talking a bit more, what you reckon, maybe a quarter, give yourself a quarter runway in 6 months.
At least,
even-
yeah.
At least.
Yeah,
least.
minimum.
Yep.
Yeah.
Yeah.
Because you also have to deal with, if you are running a business, I'm talking about business owners, you have a lease probably somewhere already. So you got to time.
Yep.
There's a lot of timing in this. What do you do? In our circumstance, we have to maybe just have that property vacant for 12 to 18 months. Are we going to build on it? Are we going to extend? There's so many different aspects. Where a investment property, a residential investment property, you could probably just purchase one and say, let's get that rented out in the next 30 days.
This is a very interesting aspect, especially for business owners, right? Because Reuben said maybe someone has a lot of money now and they want to buy their own premises and they just buy whatever they see without realizing that there could be a better way of buying, more strategically, planning well in advance. You could potentially buy a property with a lease in place that becomes vacant when you need to move out of your own premises. You don't pay GST, you pay the right price. You've done it strategically, but there's a lot of people that don't.
And I guess this would come down to then, Alberto, in your field of then knowing what asset matches the setup and circumstance, because one thing we always chew the fat on, and that's key difference with resi to commercial, is like the valuations and how it's perceived on value with leases and stuff like that. Can you just touch on some of the major differences, your experience as a commercial buyer's agent, that people come over and they're just completely blinded on, I had no idea about that with commercial property. Is there anything that sticks out?
Probably it's worth talking about the different asset types, because commercial, it's not one commercial property.
True.
You have industrial warehouses, and within industrial, you could have very different uses: manufacturing, distribution, storage, data centers, you name it. You have retail, and then you have office spaces, and then you have medical. You could have mixed use. You can have more specialized use like childcare or a petrol station. The list goes on. So what is the right asset for an investor could be completely different than the next person. And that depends on not only the structure and the financing behind it, especially if you're buying in a self-managed super fund. You have certain criteria from the lending perspective that you have to satisfy. So that purchase could be completely different than an investor that wants to build a portfolio.
Yes, true. Very true. What would you say the biggest, I guess, entry point, or because there's a lot of complexities with it all, what do you reckon is the easiest commercial to get your foot into commercial in terms of asset type? You mentioned a few good ones there that are across the board on the Gold Coast, you know, industrial, retail, office, medical, all those sorts of things. Where do you see most entry level buyers get into? And then where do you see more of the savvy ones who've built up quite significant
price-wise
portfolios
as well?
Yeah.
I would say right now, in the last few years, units have been the easiest.
And they've been
entry
growing
level.
too. They've been growing very well.
Absolutely the easiest. I remember 2022 when I was looking at industrial here in Burleigh, it was around $4,000 a square meter, and now it's 6.5.
Crazy.
Right? So is it still good to buy those units? Maybe not. Maybe there are other pockets in Gold Coast where you can buy better value for money. So that could be the easy entry level. But it really depends, because in the same suburb, every asset performs differently. So you could go to the next suburb and office space is what you should buy because there are no office spaces. And as we have seen along the Gold Coast Highway, there are no office spaces. And I remember a year ago, I was looking at an investment for a client in Mermaid. And I said, if you could stretch your budget to buy something, this would be the asset to buy, because there are no other office buildings along the highway. And it will be in so much high demand today and in the future that, for me, that will outperform today and tomorrow the industrial investment that you want to.
So a little bit different at res. So there is a component of obviously location controls a lot of the heavy lifting, but within the location, you're also going a layer deep on supply versus demand for
Correct.
the asset type. Yeah.
Asset type, which is then related to zoning.
Yes.
So that's a major key point that anyone should look at.
Yes.
You buy in a location, but what is the zoning that you're buying into? Is it industrial zoning? Is it center zoning? Is it a completely different zoning? Maybe it's a commercial in a resi area that could have a completely different uplift and play. Is it mixed use?
Yeah.
It's a big mistake I've seen with some clients. They start a gym business, they've purchased a commercial property in an industrial area, find out that they can't even start it for 6 to 12 months. They've got to get an MCU to try and get more parking and sound and all this sort of stuff. And big mistake. That's where commercial is complex.
Yeah, especially for industrial. One of the first questions when qualifying a client is, what zoning do you need? Because if you buy the right property in the wrong zoning, council can come around and shut down your business. So all of a sudden, the great purchase becomes a nightmare.
Yeah, comes null and void. Really.
Even with the lending piece, like specialised assets, the bank won't lend as much. So I've got a client who has the Globe Gym in Burleigh, then he's got like a swimming school as well. And the LVRs on those, they have to put they're 50 to 60%. Whereas because of the high risk, because no one can go in there and convert a swimming school to a tenant can't just take it over straight away.
Makes
so that
sense.
completely changes the lending again. So there's so much to it in the commercial space.
I'd be keen to hear your thoughts then, anyone who's got an opinion on this. All right, so manufacturing equity. So a lot of people believe resi, both asset classes are great. I believe they both got a space dependent on circumstance and things like that. But I know a lot of people who won't even look at commercial because they're like, oh, I can't manufacture equity like I do with resi, quick reno, flip, whatever it is. What's some misconceptions or ways you can manufacture equity through commercial? Like, how do we add value to those? Is it the leases? Is it the structure? Yeah, what are some simple ways you can actually build equity or
This
value?
is one of my favorite topics.
Yeah.
I was looking straight at it.
How do we build value in commercial property?
Can I jump in for the first
Please,
one?
please.
And so this is with the property that you found us. And so commercial property is obviously valued based on the return that it gets. And so for us, how do I maximize that return? So this is a very interesting one because it's on the Gold Coast Highway. Straight away, I've been looking into signage, digital signage, getting that approved through DA. And I've looked at the figures in that. And so that should give us an extra increase of about 100 to 150K of additional revenue. And so that in itself increases the
Yep.
and you guys will probably help me out here, but valuation. In my mind, we're getting more of a high yield out of the actual land that we have. So that simple signage, yes, it's going to cost a few $100,000 to create it, but that's going to be capitalized over a longer time. But there's plenty of ways to try and improve the valuation and equity, I believe. You just have to be smart
There's a
about
lot. I was going to say,
Yes.
there's a lot more. There's a lot of savvy ways.
Yeah.
Like,
Yes.
it's not you. There's no education around it, though, right? What about you, Alberto? This would be a lot of clients you work with are looking to manufacture equity. When
Yeah,
buying.
so you can do everything that you do in residential and commercial as well, right? In terms of adding value and manufacturing equity in a commercial property. But there's a few CapEx expenditure ways to do it, like Reuben said. That's one. Or you could add solar panels on the roof to then reduce the outgoings, which in return means a higher yield for you. The equivalent of maybe changing the configuration of a layout in residential where you transform a 3-bed in a 4-bed could be, for example, increasing the NLA in a commercial property. NLA, it's the net lettable area, because in commercial, everything is about the square meter rate of the building. So, every square meter will generate an additional $200,000, $500,000 a square meter. So if you can increase that will increase your yield. And there's quite a few other CapEx ways of doing it. But then there is one way which new commercial investors don't know, which is manipulating the lease. That is my favorite way of doing it, because you don't have to spend anything. You just need to buy the right asset, knowing what the market rent should be, and attract a tenant, and then have a completely different return. Because you could have 2 shops, one next to each other. They're both vacant, right? And they are both for sale for $1 million, and they can't sell. All of a sudden, I buy shop 2, and I rent it to Bam Bam, for example, and they're gonna pay $70,000 per annum net. Once they move in, I can sell that property probably for 5.5% in a heartbeat, which is going to be 1.35. I haven't done anything to the property. I just put in.
Right tenant.
Yeah.
Interesting. And that goes into, I guess, holding the weight of the valuation. The lease plays much more of a significant part in terms of
It's
Absolutely
valuation.
critical.
Yeah, it's massive.
Absolutely critical.
Yeah.
Yeah. So in its simplest form, would it be fair to say a really quick win or something strategic could be finding something either underleased or vacant and then getting the right tenant in there?
Yes and no.
Yeah.
Under leased, yes, but obviously it's not for the first-time investor. I wouldn't do it as a first-time commercial purchase. That's probably a second or third, because it's like buying from day one. You buy commercial. I would probably go resi first, understand the gist of it, and then buy commercial. So in the same way, buy a normal investment, easy, set and forget, that sets the ground foundation for the next one, instead of putting you under, and then go for a value add play like that.
Yeah.
But the no part of my answer is, in certain areas, if you buy vacant, it could be more expensive. It really
It's the
depends on the
vacancy rate.
supply, demand,
Yeah.
and the dynamics in that specific area and for the asset type as well. Because in the same suburb, maybe there are two industrial warehouses, exactly the same size. One is tenanted and it could sell for $1 million because of the lease attached to it. The one next door is vacant, and the owner-occupier, business owner that wants to buy, is going to buy the vacant one, and he's going to pay more because there's nothing else available.
Yeah. Just
So it
general.
really changes so much.
Still a lot of fundamentals with supply and demand, isn't
Yeah.
it? Yeah. Yeah. And then just a quick one before I want to ask you about the refi sort of process. NLA, so net lettable area.
Yeah.
So that's things like adding a mezzanine, like warehouse industrial, adding a mezzanine, all of a
Yes.
sudden you've created more floor space.
Yes. And obviously you can do it in the older style warehouses where it's not been maximized like new developments. New developments, the developer's done it for you already. There's no way you can do it. Everything is already maxed out.
Yes. Yeah.
But that's a way to do it.
Yeah. Interesting. If you've gone through the process, you might have done mezzanine, increase that NLA or new lease attached now, found the right tenant. Going to the bank, is it as simple as your general resi, hey, value this property?
Depends on the structure.
Yeah.
So if it's under super, you can't touch it. You can't
True.
pull out the equity. Whereas depending on the structure, you could take it to another bank and get like an equity release. But again, they're going to ask what's the purpose of those funds. So then they really start looking at the purpose. So if you say, the purpose is to pull out 200K and go buy a resi property, they won't like it. Whereas if the purpose is to perhaps refund more the funds that you've put in to change that asset, and that's fine. But if you go there with the wrong purpose, then you're not going to be able to get that across the line. And again, the structure has to be correct. So again, you've got to speak to the right people, because sometimes you might go to the bank and say the wrong thing, and then immediately it's a no. Whereas if you're dealing with someone who pushes you in the right direction, then so very important.
I'm interested because it's a common one too, SMSF, just quickly on just the baseline, maybe from your side, Ian, and then yours, Ruse, like SMSF. So the whole improving the asset side, and is it harder obviously to get lending as well with SMSF?
Again, it used to be really hard. So all the banks used to do it. They've pretty much pulled the pin. Now you've got a lot of second tier lenders who play in that space. To be honest, once you do one or two of these type of transactions, it's actually pretty standard. Someone's basically buying an asset under the super fund, and then lots of the time they're basically renting that property back off it. So let's say you're a mechanic and you want to buy the premises that you're currently leasing.
Yeah.
You might buy that under your super and then lease it back off. So yes, originally it used to be probably quite difficult, but those second-tier lenders, they play such a big part now. You've probably seen in the resi space, like second-tier lenders are huge.
Yes.
And now they're really taking over that self-managed super space. And I think once you do a few of those sort of transactions, and again, you've got good advice, the process isn't actually super hard.
Yeah.
Everyone thinks it's this big thing, but once you've gone through it, it's honestly, I think it's pretty standard.
And what about Rubes? Like, you work with a lot of business owners there. When would you say a business owner starts to potentially look at exposing now an SMSF or using that as a investment tool? Is it once they've maybe exhausted company structure and things like, and then bounce to SMSF? Or is there any things you've noticed dealing with a lot of business owners, how they use SMSF?
Yeah, I think a lot of business owners that have been growing, and they're getting to the stage where their personal marginal tax rates are at an all-time high. They need to find ways to move cash into more tax-effective environments. We start to utilize SMSFs in that sense because they can then use their caps and so forth, as well as them wanting to either grow or expand their business in terms of the premise that they're in. And again, I go back to e-commerce because we have a heap of e-commerce businesses. These guys move at speed, and usually they're changing warehouses or going into a different environment very quickly because of how fast they grow. But a lot of the time they are just paying more and more rent to somebody else. Meanwhile, their cash flow is great and they're just driving a lot of profitability, paying an exorbitant amount of tax. So then we start looking at, how do we do this in an environment where you actually own the premise and then get tax deductions along the way, build an asset on the other side. So I think it's case by case. But if you are a business owner that needs an office or a warehouse or something like that, you may as well start planning that from the start, because there are many ways to use that SMSF. And for a business owner, plan it from the start. I guess most business owners will try and go into business to try and achieve something like a bigger goal and grow their wealth. And so why not start planning it from there? It's one of those ones that, is there a perfect time? I think the perfect time is just to get very clear on what your business is going to look like in the next 5 to 10 years.
Yeah,
I think
totally.
and then you start planning it from there. Like I mentioned before, we've been trying to plan this out for a very long time, and we'll continue to go down that commercial aspect as well. Two of the businesses I have now are owner-occupied commercial properties.
Commercial,
and I'll just keep going because it just makes sense. It makes a lot of sense.
And in its simplest form too, on a high level, you're essentially renting. There's a component that the business is renting back to yourself, pretty much circulating the... Which, again, in its simplest form, hey, when you hear it, and not many people get that, but it's very simple. If you own a business, you could potentially rent to, because you're the director and you're the owner with the setups. If you set up well,
that's
you're essentially paying yourself the rent.
Exactly right.
Yeah, I've seen it time and time again in the last 10 years. That is the smartest way for a business owner to buy their own premises. And right now I'm helping a doctor who's been renting a clinic for 10 years and the rent keeps going up. Now she can afford, she's been planning for this, and we are buying the premises for her to then rent back.
Yeah.
And we're finding as well that even with change of interest rates, whether it goes up a little bit or not, as long as they've planned it, generally the actual repayment is similar or less to the actual rent that they're paying.
Yeah. I find it so often it's less.
Yes.
So often it's less.
Wow.
Yeah.
And yes, you have to give away a bit of cash, but that's just going into your superannuation anyway. So it's yours. You just can't touch it for a while, but I feel like it's a win-win across the board. Yeah.
And especially when you're hearing that there are ways the barrier of entry could be a little bit lower in terms of actual cash or equity too. It's just, unless you're having, and that's the thing, that's why I really wanted to do this app, because I know these conversations aren't just readily available, because I guarantee there's some things out of this app where it's just, what the hell? Like, I'm going to look at
like, where do you find that?
Yeah, exactly. And I guess, mindful of time, fella, this is an absolutely sensational episode. I want to finish now on Gold Coast, pockets, locations. Let's give the listeners a little bit of, and we can all contribute because there's no real right or wrong, but it'd be just good to hear where you guys might be seeing maybe some of your clients buying in, where obviously you might be buying in, where you're seeing a lot of business owners reside. And for myself too, our team covers the whole Gold Coast. I'm seeing these pockets starting to gentrify up as well. Where do you guys see some of these asset classes on the Gold Coast? In terms of, let's give them some pockets or areas where you guys seeing potential for commercial property.
Can I go northern New South?
Yeah. Oh, that Tweed
I've seen
Munjumble drive.
A couple of people recently in e-commerce buy. There's a new estate near Moolumba.
Ah.
Yeah, they look awesome, and it's probably at that price point where you're buying in the Goldie now. It's probably out a lot of these people's leagues, whereas down in Moolumba, Tweed, you still get very good
value for money.
Very good value for money and good returns if you're buying as an investment.
Yeah, there's some good pockets here and around Minjimble Drive. There's some
there's so much
industrial
commercial around
estates.
there.
Yeah, recreation drive, I think, in around there. What about
Industrial
you?
Drive.
Yeah, industrial drive. Yeah. What about you, Alberto?
I'm
What
going to be
about
a little
the
bit
coast?
controversial here.
Yeah. Please.
We don't really have hotspots.
Yeah,
you
yeah.
know? Like I said before, it really depends on the asset type and the location and the imbalances within that location and asset type. So you can't really say, oh, buy Burley because it's good. You have to look at the comparables within the same asset across different locations and then work out where are the imbalances? Where can I buy better value for money? Who's going to be the next buyer for this property? Is this business owner happy to pay more to stay in Burley, or are they happy to drive a little bit further out and pay less if you find that pocket? So
It'd nearly come down, would you say, all right, let's say, would you break it down into, all right, industrial sub 2 million? Would that give a bit more, say someone's industrial, because I find that's probably the most common buyer pool, you think Gold Coast, industrial? Say industrial sub 2 mil, gone to the bank, set up. Where do you think, from a square metre rate point of view, some potential future value or just a pocket that might be for that particular asset type?
okay, I'll probably stay away from Burley.
Yeah, because
It's too expensive right now.
Because it's gone. It's had its
and then
yeah.
there's so many small developments. They're all the same.
So supply's
the
gonna scarcity's
Yeah.
reducing.
But probably I really like, I don't know if I should say that.
An area.
I do like Tweeds, good
Yeah.
value for money. I really like Karambin, for example. It's limited supply.
Yeah.
So that's what drives really the decision making. But also I like more the northern side, like Mollandina. That's a good location out there. Yatala, it's growing a lot, which is still part of the Gold Coast.
Yeah.
So there's a few areas for industrial where people should look at, although I would stay away from new developments. They're very expensive.
Yeah. Like the brand new.
Very expensive.
I was going to ask you that question.
It's one of the things to avoid, or one of the biggest mistakes that people do is buy brand new with a promise from the developer that the rent is going to be XYZ, or they offer you a rental guarantee or a lease back from them. And people jump on these things without realizing that they think they're buying a 5.75% or 6% net yielding property. Oh my God, I found gold mine. Yeah, but in 2 years' time, that rent is not sustainable at all. So your yield is going to go down to probably 4.5.
And remember,
that means you're overpaid.
Yeah, I was going to say, and remember, you're buying in on the lease as well. So it's manufactured lease on purchase.
Yep.
And it's similar to Resi too, the old off the plans and
Correct.
But
like I said before, one of the way to manufacture equity is to manipulate the lease. So someone can manipulate the lease and pay a much higher rent, and then you're buying essentially a dud.
Yeah, that's a really good tip there. Where are you, Rubes? You know the Gold Coast pretty well. You got a few businesses on the coast.
Yep.
What do you think?
I'll split this up into two sections. One is where I think I see a lot of movement because of the types of businesses that are coming into the Gold Coast. And so I'm saying, and this is not an area where I think that it's actually a good investment. I'm not saying it's a good investment. I'm just saying it's a very much a hot spot for people buying, and any sort of industrial premise that's closer to the coast, to the beach. We have a lot of clients, and this is before they seek advice, are buying those brand new industrial places because they are now, the businesses are shifting to, one, coming back to the office. I see a lot of that's happening. And two, they're shifting with AI to having smaller teams. And with smaller teams, they can access smaller premises, warehouses. Instead of having a team of 30, they have a team of 5 backed with AI, and they can do everything in this sub $2 million man cave area. So I do think on the Gold Coast, I'm seeing a heap of Melbourne, Sydney businesses that are coming to the Gold Coast. And it's interesting because they're not really looking at it from a commercial standpoint. They're just looking for a home for their commercial business. And so when I say hot, I think they will still sell very well because the amount of people that just want an office. And again, it may still be similar or same price in terms of rent to repayment. What I like at the moment is potential mixed use development areas around coastal, like the closer towns. And so having someone like Alberto find you one of those gems, they're harder to find, but the mixed use side is very, very difficult. And the amount of people that are coming to the Gold Coast with businesses that need a mixed use property to own and house their staff, I think it's going to become very rare, especially if you want to be closer to Miami, Mermaid Beach and Burleigh, those coastal areas.
Mixed
Super hard.
use, it's one of my favorite zoning
Yes.
to buy. But obviously, as we saw,
Yes.
you could be competing with developers as well.
Yeah.
So strategically, it's probably one of the best buy. However, you're not the only one. In fact, I don't know if you remember when we looked in Bundle,
Yes.
I would have loved to buy that property. It wasn't suiting the business, so we didn't do that. But from an investment perspective, it was great.
Yeah.
It was really phenomenal.
Yeah. So I think with investment perspective, Alberto's take on it. From a business perspective, hotspots, I think we just have this Gold Coast bubble where people want to live here and work here and they're willing to be in the best area and run their business from there. And so you seeing that as well?
Yeah, definitely. And especially, people want to maybe even work from an office close to where they live and they live in Mermaid or Miami. Where can you find an office to buy?
Yeah. It's pretty wild.
I want to open a Pilates shop. Where can you do that? There's not enough shops.
The stretch along the Gold Coast Highway, there's only so many dwellings you can obviously get.
Correct.
It's our main, frontage. You got the light rail now too. That's copping a lot of frontage. I think that holds value as a business owner. Myself, I see the value in being in places you can be seen too, because our business is very people orientated. I guess it comes down to the right tenant will value a premises way differently to someone else because of their business model or whatever it is. So I guess the key takeaway from today is, number one, I've taken down that at the end of the day, I believe residential is a good starter for sure because you learn the fundamentals. I think at the end of the day, the foundations to wealth or breaking into a market is key. I'd say a lot of today's chat, I would predict a lot of the chats you're having with people too are seasoned, or they've either built somewhat a business, they've got maybe their owner occ plus a few investments maybe, or quite savvy people that are diversifying as well using things like SMSF. So this episode hopefully given that little open door of there's a whole nother world.
Oh yeah.
There's a whole nother world. That's what I mean. We've gone well over time, but I'm going to have to do another ep like this because I found there were so many key takeaways. The cool thing, cherry on top, I think the Gold Coast right now, not only from an economic standpoint, as you said, Rubes, there's a bit of a bubble around our city. A lot of people are moving here. The thing I've noticed most in the last 18 months are a lot of people moving are business owners and they're entrepreneur and they're seasoned business owners. So they're bringing in teams and a lot of customers and brand into our little city. But the thing is, like housing, where they all go, there isn't much space available. So that's why I really want to highlight, I believe commercial property hasn't even scratched the surface here on the Gold Coast. So hopefully today's ep has given the listener a bit of a lift the lid on what's coming. Lads, I'd just like to finish on the Temp Therapy Fast 5. So brought to you by the crew at Temp Therapy, saunas, ice baths, all the gist but you fellas would get amongst that, I know it. But the lads sponsor this little segment, and what it is first thing that comes to mind just on the Gold Coast now. So the first one's the beach. What's your favourite Gold Coast beach? Maybe we'll go this way to this way. Palmy, yeah, you're always running down, Jeff. Actually, I seen you this morning running. Yeah. What are you? You're a mermaid, aren't you? You're
Nobbies and Karambin.
I see your shirt off in the run clubs along Rafiki's, I think.
It's always there.
He's invited me to that run club.
Yeah.
I'm a Nobbies guy.
Yeah.
Love that precinct around there. It's pumping.
It's pretty cool, eh? Yeah. What about in terms of cafe or restaurant? There's a lot to choose from at the moment.
No, I'm going with a local again, Jeffos.
Oh, yeah?
Under the surf club.
Yeah. What a position.
Best position.
Yeah.
I think Brandon's mentioned. Evo on toast, Evo crumpets.
Yeah.
It's so good after a run. Can't beat it.
Good spot.
Yeah.
What about you?
I'm going Holiday and Oxley.
Yeah. Yeah. Holiday in the morning and then Oxley
And
at night.
Biscuit that moved to Oxley.
Yeah.
Hey, you and I could be best friends. 'Cause I was going to say Holiday
Just
as well.
different time.
Yeah, that's right. I'm Holiday as well. The coffees are
Coffee.
exceptional.
Yeah.
And then for a dinner, I'd be going to Lars. Lars is the again
fair.
that
I heard
Nobby's precinct.
Heard the steaks like
Amazing.
next level, eh?
Yes, very good.
Yeah, true. And we might, just to finish on, it's a bit of a different one. We usually do resi, but in terms of commercial, we heard some of the areas there, so we touched on that. But where would usually ask the dream property, where would the dream office be? You might be in yours already, but on the Gold Coast, you open the facility, you got a commercial, but where would you place it on the Gold Coast?
Mate,
Full
I'll probably
range.
say around somewhere where you are. James Street, Burleigh, close to home, good thoroughfare.
Yeah.
It's just such a good spot.
Yeah. What about you, Alberto? Where would you open?
Either Burleigh or Broadbeach.
Broadbeach, yeah. A lot of eyes and like a lot of
True.
traffic, hey?
Yeah.
Like foot traffic, road traffic.
And obviously businesses that we interact with. And
Yeah. Self, Rubes?
I've got two. One's a personal one, but for the business, I would love to be water on water commercial. Very rare. All right. And so there's one in Broadbeach. And
Yeah, there isn't
Bundle,
many, eh?
there's-
Yeah.
I don't know if we can help you with that.
Yeah, there isn't.
I had another one recently.
And then the other one is a personal. I would love to own a golf course.
Yeah.
Wow.
That's my dream.
All right.
Yeah.
I'll buy a golf course somewhere on the Gold Coast.
Yeah.
A few business partners.
Yeah,
there.
I was going to say. let's
Sign me
make
up.
let's make it happen. Now, lads, I really appreciate it. We'll put all the links to where people can find you in the show notes, but we'll have to do this again soon. That was a
Sounds
heap
good.
of fun. Yeah.
Thanks, mate.
Thanks, fellas.
Been great. Thank you.